Here's your latest crypto news. Major moves in the crypto world today. The market just took a $500 billion hit. What's next for Bitcoin and Ethereum? Plus, US Congress forms a bipartisan crypto working group. Coinbase pushes for crypto-friendly banking rules. And Trump's latest stance on crypto has the industry buzzing. Welcome to your latest crypto update. Whether you're watching on YouTube or tuning in on Spotify, we bring you the most important insights on Bitcoin, Ethereum, altcoins, and the latest regulatory developments shaping the industry. Make sure to subscribe on YouTube and follow us on Spotify to stay ahead of the market with real-time analysis and breaking crypto news. Today's top stories. Bitcoin and Ethereum market shakeup, 500 billion wiped out. 1. What's next? 2. Coinbase fights for crypto-friendly banking rules. Will this open the door for mass adoption? 3. US Congress forms a bipartisan crypto working group. Regulations are coming. 4. Trump's surprising shift on crypto. How will it impact the market? 5. Massive legal ruling. OneCoin lawyer loses appeal in £400 crypto scam. What's your take on today's crypto news? Is the market setting up for a recovery, or is more downside ahead? Drop your thoughts in the comments. Bitcoin declines as market rout wipes $500 billion off cryptocurrencies. Investors have withdrawn over $500 billion from the cryptocurrency market in response to President Donald Trump's initiation of a trade war, leading to a significant decline in the value of digital assets. Bitcoin, the premier cryptocurrency, dropped by 4.1% to approximately $95,400, and Ethereum plummeted by 17% to $2,597. The overall valuation of the global crypto market shrank from around $3.6 trillion to roughly $3.1 trillion. Trump's recent tariffs on imports from Mexico, Canada, and China have triggered widespread market disruptions, reflected in a tumultuous sell-off of riskier assets, including cryptocurrencies. This decline follows a previous surge in cryptocurrency values post-Trump's election win in November, fueled by expectations of a rejuvenated crypto industry under his administration. The announcement of tariffs has spurred fears of inflation, pushing investors to move away from cryptocurrencies and other high-risk investments. Please note that the cryptocurrency market is highly volatile, and developments can change rapidly. It's advisable to consult multiple sources and exercise caution when making investment decisions. Coinbase urges regulatory clarity for banks. Offering crypto services. Coinbase Global has renewed its call for U.S. banking regulators to provide clear guidelines for banks to offer cryptocurrency services and partner with digital asset companies. This move aims to establish a regulatory framework to support the industry's growth. Historically, U.S. banks have been hesitant to engage with digital asset firms due to regulatory uncertainties. Coinbase's chief policy officer, Faryar Shirzad, expressed frustration, accusing regulators of undemocratically preventing banks from providing crypto services. The company has sent a letter to major banking regulators, urging them to allow banks to offer crypto-related services. U.S. Congress forms bipartisan cryptocurrency working group. Representative French Hill announced the creation of a bipartisan working group within Congress to develop policies that support the growth of digital assets. This initiative aims to provide clarity on a regulatory framework for cryptocurrencies. The announcement was made with the participation of the White House's crypto and AI czar, David Sachs. President Donald Trump had previously ordered the formation of a cryptocurrency working group to propose new regulations and explore a national cryptocurrency stockpile. This move contrasts with the previous administration's focus on preventing fraud and money laundering within the industry. Lawyer convicted in $400 million crypto scam loses appeal. A federal court in Manhattan has upheld the conviction of Mark Scott, a former partner at the law firm Locke Lord, for his role in a fraudulent cryptocurrency scheme that nearly reached $400 million. Scott was convicted in 2019 for conspiracy to commit money laundering and bank fraud, receiving a 10-year prison sentence. The appeals court determined that there was sufficient evidence to support his conviction. In addition to his sentence, Scott was ordered to forfeit over $392 million, several bank accounts, a yacht, and 2 Porsche cars. Scott was involved in the OneCoin fraud created by Ruja Ignatova, known as the Crypto Queen, who remains a fugitive and has been on the FBI's most wanted list since 2022. Crypto enthusiasts celebrate in Washington amid policy shifts. Crypto enthusiasts in Washington, D.C. celebrated President Trump's re-inauguration with the crypto ball, reflecting a significant shift from the previous administration's stance on cryptocurrency. The event featured prominent figures, including Donald Trump Jr. and House Speaker Mike Johnson, mingling with crypto executives. President Trump and the First Lady introduced meme coins, signaling broader acceptance and potential financial gains from the crypto resurgence. This turnaround contrasts with the prior administration's crackdown on the crypto sector following notable meltdowns, such as FTX's collapse. Industry leaders expressed relief at the renewed favor, with Coinbase's CEO, Brian Armstrong, describing the shift as removing a boot off our throat. Trump has taken steps to bolster cryptocurrency, including forming a regulatory framework and appointing David Sachs as White House AI and crypto czar. Investments by Trump Media and Technology Group further underscore this commitment. Despite some skepticism about meme coins, the overall sentiment in Washington has become significantly more crypto-friendly, promising legislative progress and greater integration of digital assets into the economy. Breaking news: the US SEC is dramatically cutting back its cryptocurrency enforcement efforts. According to a recent New York Times report, the US Securities and Exchange Commission, SEC, is set to significantly reduce its focus on cracking down on crypto industry players. What's happening? 1. The SEC's dedicated crypto enforcement unit, which had around 50 members, is being downsized. 2. A major shakeup within the division has already taken place, with a key lawyer handling crypto cases being removed. 3. This move was widely expected following the departure of former chair Gary Gensler. New leadership, new direction. 1. Acting Chair Mark Uyeda and Commissioner Hester Pierce have long criticized the SEC's aggressive stance on crypto. 2. Pierce is now leading a new task force focused on developing clear regulations instead of blanket enforcement. 3. This task force will tackle key issues like defining digital asset classifications, custody solutions, and a potential safe harbor for tokens. Industry reactions. 1. Ripple's chief legal officer, Stuart Alderodi, praised Pierce, calling her a steady voice for regulatory sanity. 2. Many in the crypto space see this as a step toward clarity after years of regulatory uncertainty. 3. Reports suggest that the SEC may freeze or even drop some non-fraud crypto cases, signaling a shift in policy. What does this mean for crypto? 1. Less aggressive enforcement could encourage more institutional adoption and regulatory-friendly innovation. 2. Projects that were previously under SEC scrutiny might now have room to grow. 3. However, without clear rules, the lack of enforcement could lead to more bad actors entering the space. What's your take? Is this a positive move for crypto, or does it create more uncertainty? Drop your thoughts in the comments.